Hello, Alex Cole. Great to see you here on the GoNoGo show on Thursday, June 8th, 2023. How are you doing, my friend?
I'm doing well. Finally some readings going in the right direction for the strange air quality we've been having this week.
Yeah, air has been a little hazy. Markets have been a little hazy, hard to see through. But seeing clearing skies on the asset management front as well. Let's dive into our cross-asset heat map from GoNoGo charts and take a look at what's happening from the asset class perspective.
Yeah, let me just put the S&P in the top there. But as you can see, we've been in these trends now for several weeks, which is nice to have sort of some kind of stability, like you said. And equity markets, we'll talk a lot about the S&P in a minute and how we sort of broke above and consolidated above some important levels. But you can see that we are in a go trend and have been now since the beginning of April, really. And we've seen those bars strengthen over the last week or so. And then we're looking at the Treasury bond prices in the second panel, still in a no-go, and that no-go strengthened, of course, bond prices, not rates. Rates will be moving inversely to prices, of course. The third panel is commodities. Those are in a no-go as well, albeit painting weaker bars. And then the dollar down in the bottom panel, still holding on to that go trend.
Absolutely. Let's dive into the U.S. equity markets, starting with the S&P 500 on a daily basis. The key levels you're talking about at 4,200, that has been a resistance zone for quite some time. And here this week we have broken above and consolidated and confirmed that move with multiple daily closes, not just above the 4,200 level, but also above our late August highs from 2022. From a trend perspective, Alex, let's talk about what we're seeing both in terms of price action as well as the momentum in our GoNoGo oscillator.
Yeah, I've got the crosshairs on here, and you can see that sort of key level just as we approached, 4,200, what was providing some resistance. But what was interesting this time around was how the oscillator generally was able to stay at or above the zero line while price struggled with those levels. So at no point did we get significantly into negative territory after failing at that resistance level a couple of times. So what that told us was that we were seeing trend continuation, and we were seeing momentum generally staying on the side of the go trend. And then every time we rallied into positive territory, that was telling us that momentum was resurging in the side or in the direction of the go trend. And of course, on heavy volume, when we found that support one more time, heavy volume, of course, because the oscillator is dark blue here, we could see that price was finally able to climb above those levels. And then, like you said, this week, we've really sort of maintained those levels and consolidated well above those levels. And if you want, Tyler, I can pull this back to a weekly chart to show you these August highs that you're talking about. That's been sort of in our conscience as we've been seeing this go trend develop, especially on the daily chart. We set new highs above the highs from earlier this year, but in the back of our mind, we still had the highs from August of 2022. And you can see that we actually closed above the high prices for the week. So the actual weekly close, we're well above, but we've actually also had a close above the high from August 2022. So some positive signs. And I know that a lot of people, Tyler, that we're talking to, getting quite excited about what that might mean.
Absolutely. Certainly in the face of particularly dark financial news headlines, it's nice to see that the market is seeing past a lot of that as a discounting mechanism for what we might be able to anticipate in the future. Sticking with the U.S. equities topic here for just a second, let's turn our eyes over to the Russell 2000. We can just use the ETF proxy IWM. A lot of the discussion we've had with clients this week about improving breadth, particularly in the small cap space. We've seen strong leadership from mega cap growth equity names that we're all familiar with, the darlings of the COVID collapse. But we're also seeing that breadth improvement and rotation into small cap styles. So the Russell 2000 breaking above a downward sloping trend line, certainly in go trend conditions here on this daily chart, and seeing strong momentum on heavy volume, which is a nice confirmatory indication of this move higher in the Russell 2000.
Yeah, and you can see that there's multiple levels that were important here. And you can, when you get a confluence of events like this, we've got the downward sloping line from these falling highs that we were then rejected at just a week or so ago, a couple of weeks ago. And then you've also got the horizontal level of resistance that have come from this pattern here, this basing pattern, some might call it. And both of those broken as the Go trend took hold. So that was a very interesting moment. And we can see that the trend is now in a Go for the small cap Russell 2000 ETF. And you can see how this followed a clean break out of a max GoNoGo squeeze. Lots of volume support found at zero as we were sort of struggling with those resistance levels. And then now momentum in positive territory as we seem to be climbing higher. But you can see, Tyler, how the small caps have lagged behind the larger cap because we aren't close to the highs from earlier in the year that we've already eclipsed on the S&P.
Absolutely. And let's, in typical tradition, multiple time frame analysis, let's take a look at this on the weekly basis as well, just to give some perspective about where we're at in the broader context, the series of higher lows and the falling highs that have brought us to this moment of inflection. On a weekly basis, we're seeing trend conditions neutral. Of course, this week has not closed yet. We'll see what follow through looks like on Friday's trading activity. But here at June 8th, certainly looking like a very constructive chart for the Russell 2000. Boy, that fake out in late 21, that still gives me shivers. Breaking out of that channel only to reverse into bear market territory in 2022.
It's certainly going to be a bit of a battle here for the small cap stocks because you've got falling highs and rising lows. And, you know, people call that a coiled spring, a symmetrical triangle. This is over a long period of time, given that this is a weekly chart. So you've got sort of quite a battle raging, and it'll be interesting to see as buyers come in more aggressively at the lows and sellers come in more aggressively at these highs. You can see that we are tapping right up against that downward sloping trend line as well. We are painting amber goldfish bars. Those, of course, are the bars of uncertainty. So what we saw on the daily chart still has some work to do to find follow through on the weekly chart. But, you know, if we can get significantly above this level, and perhaps we'll see Go colors again, hopefully there'll be some follow through and some consistency in the Go trend that we didn't really see here at the end and into early 2023.
And multiple resistance areas on the way back up towards those 2021 highs.
Yes.
So it'll be an interesting ride as we approach each of those resistance levels. So let's turn our eye to some of the macro factors affecting our equity investments, starting with the TNX on a daily basis. We mentioned in that asset class rel map, sovereign bonds, U.S. Treasury bonds, prices turning down in a strengthening no-go trend, rates moving inversely, the yields are climbing again. Talk to us a little bit about what we're seeing from a longer term perspective on this chart of TNX.
Well, you know, what's interesting is the trend lines just jumping off the charts this week. And I think that's one of the beauty, or sort of one of the valuable components of keeping your charts as simple as possible. And just the trend lines jumping off here, you've certainly got some resistance to deal with as rates move higher. You could see how we failed at this level just over a week ago, and now we're rallying back towards it. It's going to be interesting, and we've made the comment over and over again over the last several weeks that people are talking about instead of a rising rate environment, more of an elevated rate environment. And so we may move sideways, we may sort of stay at these levels for some time, but perhaps not rise to sort of new highs too quickly, or perhaps not fall back either to the lows that we were accustomed to a couple of years ago. So at the moment, on a daily basis, we're certainly seeing some strength as the Go colors are being painted, but we are going to have to watch what happens as we approach the downward sloping trend line from these highs.
And certainly not seeing a lot of momentum to back up this trend condition on the yields for U.S. Treasuries.
Yeah.
All right, let's change our focus to UUP, the ETF that we use as a proxy for the dollar index here at GoNoGo Charts. It's going to give us some volume information in addition to the price action. Some wild swings in the currency markets recently. Talk to us a little bit about what we're seeing in this chart of the US dollar.
Yeah, this potentially could be a bad print, but we are certainly seeing some support for this go trend. The oscillator came back down to test that zero line on heavy volume, and it quickly bounced. It didn't even spend any time at the zero line at all. So as we saw market participation giving support to this go trend, we are painting strong blue bars, but we've come off the highs from these counter trend correction arrows, which of course, if you're watching where my cursor is, you know that's a natural point of resistance from the prior highs on the chart. So again, another situation where we are in a trend, but we have some overhead resistance to deal with.
Absolutely. Context is key. And let's take a look at GLD, gold, a corollary to the US dollar. Boy, really on the struggle bus in this range-bound territory for gold. Certainly frustrating to a lot of gold bug investors that were looking for a major breakaway opportunity.
Yeah, especially with the talk of that potential multi-year cup and handle breakout that didn't quite happen. We've seen a real fall away from those highs and a no-go trend in place, and most recently resistance at the zero line. So in the short term, nothing to get too excited about in terms of a rally in prices for gold. Certainly the general movement of this chart is up, followed by a correction, up, followed by a correction. So we will be watching to see if the oscillator gets back above zero, and then potentially we'll have another run at those highs. But for now, we're in a no-go trend, and we're currently seeing the zero line providing resistance.
You know, that concept of polarity, Alex, that we talk about frequently around price action also applies to the zero line in the GoNoGo oscillator.
Absolutely.
So when we are in a go trend on blue and aqua bars, we tend to see the zero line providing support, momentum surging and then cooling back to a neutral level. In no-go trends, the opposite can be true, where we have negative momentum and it rallies back to neutral, right? Cools, right? The negative selling momentum cools back to a neutral level, but we find resistance there at the zero line. So let's turn our eye to U.S. oil, and let's take a look at what that weekly chart shows us. The daily is just too darn choppy.
Yeah, and this is the chart we've been looking at, and you know, for us with oil now, we won't really pay much attention to anything on a smaller time frame than this. We would need to see breaks or significant movements on this weekly chart, because this is where the clear trend is. You can see that we've got this no-go in place. We've got lower highs and lower lows, and every time we threaten to break higher, we get turned away. So right now, if we made this a channel and just looked at where the lows are for this channel, then we can see that we've got our price trading right around in the middle of this channel. So nothing really doing on oil. Oscillator showing that momentum has really struggled to get away from the zero line for several months now, even back to last year. That hasn't moved really far in a negative direction or far in a positive direction. And again, we're right back at zero, right in the middle of this downward sloping channel. So really not a lot to get excited one way or the other with oil.
But as a textbook example of using GoNoGo charts, if you do trade to the short side, the red circular icons above our price action are telling us when momentum is resurging back in the direction of the underlying trend. So green circles in a go trend, red circles in a no-go trend, and that's just representing the interplay of the price panel with the GoNoGo oscillator. So where we get rejected at the zero line over and over and over again, as price rallies to the top end of that downward sloping channel, it's an opportunity to fade the rallies. And using that in more of an objective or quantifiable sense, where you're trading with the momentum in a directional sense, can be really helpful to investors. So Alex, let's move on from oil. Let's take a look at our crypto rel map. We haven't checked on that in a couple of weeks, just in terms of how our non-fiat currencies are doing in relation to the S&P 500. So we're looking at the largest by market cap coins in the cryptocurrency space, relative to the S&P 500. That top panel is showing us an absolute trend on Bitcoin, which is in a no-go in the weak form. But then relative to the S&P, we've also seen these larger cap coins underperform as the S&P 500 has been rallying over the last month and a half. In the bottom panel, we're looking at Ripple, and we're seeing some outperformance there from perhaps more speculative coins in the cryptocurrency universe, but otherwise a no-go relative trend from our larger coins against the S&P 500.
Yep.
So equities over tokens. Shares over tokens. I'm not sure if there's a Chuck E. Cheese joke in there somewhere, but I'll ask my 9-year-old daughter. Let's move on from the crypto realm map, Alex, and let's talk about stylistic asset allocation. With a lot of our clients, in terms of how they're thinking about allocating capital within their portfolios, they're looking at the Morningstar 9 style boxes, and we can apply the GoNoGo concept to these same 9 categories, where we are looking at value versus growth. The top 3 being value versus growth in the small cap arena, value versus growth in the blended, right, small, mid, and large, and then value versus growth in the small cap arena. And what we're seeing is that growth equities are outperforming in multiple categories, but we're also seeing our small cap counterparts reflect either neutral or go trends relative to the S&P 500. So this week, we've seen some improvement, some constructive evidence in that smaller cap stylistic space against the broad-based S&P 500. Anything else that we want to pull out of this heat map for our viewers here today, Alex?
Yeah, I actually think this tells a fantastic story, Tyler, because, for the whole map, it's been large cap growth where the outperformance has been. And that lines up with what we were seeing, of course, with the S&P. But then you see blended large cap coming in and starting to outperform. So again, large cap leading the markets higher. And then now, like you said, you're starting to see small caps coming in. You see small cap value in amber go fish bars. You see small cap blend just entering a go, and small cap growth as well. So just to see that so clearly from large cap growth, large cap blend to small cap blend and growth is just it's just an interesting story, and you can really see how that is changing.
Absolutely. And we know from a lot of our clients that individual stock picking is not the primary target that they are using in their asset allocation. They're thinking about stylistic or about sector level bets. And so let's use that as a segue to get under the hood of the S&P 500. Take a look at the GoNoGo sector realm map. Same principles here. We're using the trend concept, just those colors, removing the price action, but looking at the ratio of each of the sector ETFs relative to the benchmark performance. And this story is remarkably consistent the last few weeks here. A lot of churn and uncertainty in the markets prior, but we're seeing all of the cyclical sectors and defensive sectors underperforming the rising S&P. Though those no-go trends on a relative basis have weakened to their peak form. So a little more neutrality from the cyclical and defensive sectors. But it's our growth equities that are leading. Information technology, consumer discretionary, and a strong blue go trend of outperformance, as well as the communications sector pulling up ahead of the S&P 500, helping raise the index. But as we know, it's a market of stocks, not a stock market. So we have to understand where our leadership lies. So Alex, in the remaining minutes of today's show, why don't we take a look at a few individual names within those leading growth equity sectors, but on a smaller cap basis?
Absolutely.
The first one I want to pull up is AI. C3.ai is the company name, ticker is AI. And we were looking at this last week on very short time frames with that impressive move on heavy volume. But what we're seeing now is a resumption of that upward trend. We certainly had a parabolic move and pulled back, mean reverted to that upward sloping trend line. But we're back in strong go bars, and we're still seeing that heavy volume even as we're looking for support on the GoNoGo oscillator. Certainly plenty of talk, even my grandma asking about my daughter's grandma, asking about ChatGPT and other AI applications and what that means.
Yeah.
Pretty remarkably fast adoption across lots of industries and even households. So it's interesting to see that this is still in a go trend, despite that parabolic move to the upside.
Yeah, I mean, and the way this gets implemented across our society is going to be so interesting. And there's been conversations all over the place about the value versus the concerns, even from something like grading papers. I have talking to somebody who's grading papers and teaching, and the struggle that they foresee in terms of being able to know whether or not somebody's using AI to help with answers, and comparing it to the use of the calculator in the old days, and where do we fall on those sort of conversations. But either way, it's here to stay, and it's going to be being used in more and more of our industries. So from a pure trend perspective, looking at this company, we're in a go trend, and we're consolidating above these levels that were resistance. And as you said as well, we're at zero on the oscillator, on heavy volume, lots of market participation in this recent move. And we're going to look really, really closely, pay attention over the next couple of days. If we find support here, we're going to see trend continuation, and we'll probably see an attempt at a new high. So certainly an opportunity here to participate in a go trend if we find support at the zero line.
And for right now, listeners, you'll still see Alex and I on this week's show, but we're constantly looking for a ChatGPT version where they, the computers can deliver this wonderful, witty banter for you.
Or even a deep fake video that looks just like you and me talking about the markets. Who knows?
Yeah, have you listened to the new Beatles album?
It's
Not written or played by the Beatles?
Incredible, yeah.
Incredible. All right, let's move on to another ticker, VTSI. Smaller cap technology name where we've seen a pretty persistent go trend on the daily basis.
Yeah, this is a more established go trend, obviously, and you can see how it's made its climb and then consolidation and then climb and then consolidation. And we talk about taking the stairs on the way up, right? As go trends develop. This one to me looks like perhaps an opportunity to sort of participate in the next leg up potentially. We've seen this sideways consolidation here that seems to me to be being broken as we speak to the upside. So we had move higher, consolidation, we had move higher, we had consolidation, and it seems as if we've been able to stay above zero. We've got positive momentum, and we're already making that new higher high. So this looks like a fairly strong chart for a go trend already in place.
Absolutely. Haven't even seen the retest of the zero line in this recent run. So
this is a situation where you might have to drop down a time frame, right, to get that sensible entry point. You would probably have seen go trend continuation on a 2-hour or a 4-hour chart.
Absolutely. Well said. Let's turn our eye to BLND.
Yeah, this is an interesting one because of the specific moment we're in. We're in a max GoNoGo squeeze, the climbing grid of the GoNoGo squeeze telling us that momentum has been stuck at the zero line for an extended period of time. And remember, that means that all of the inputs, the blended weight of the evidence approach to momentum, are in their neutral territory. So there isn't a lot of directional pull. So we are in a go trend. We've broken above, you imagine, this downward sloping trend line here, and we're consolidating sideways now as the market decides what to do next. So any kind of break out of this squeeze into positive territory may well give price the push it needs to get through this small gap here on the left. Of course, if it breaks into negative territory, then we would know that theory is null and void. But certainly at the moment, in a go trend, setting higher lows, we're going to watch this reduced volatility, which is, of course, represented by this climbing grid of the GoNoGo squeeze, and we'll see in which direction we break.
Yeah, for those of our viewers who have watched the GoNoGo Charts special episode around embracing volatility, what we discussed is that volatility squeezes can happen in two different conditions, either under a trend continuation condition or a trend reversal. And nobody knows what the right side of the chart is going to look like ahead of time, but we can look objectively at this tug of war between buyers and sellers, where we still have plenty of trading activity, but that price range has narrowed. The GoNoGo oscillator has fallen to the zero line from positive territory and has remained there. So that's the orange grid that Alex just highlighted. And what we know is that the direction of the break is a very key indicator to future direction and velocity of price moves. So we want to trade in the direction of the break, very similar to how you would use Bollinger Bands or Keltner channels, if you're familiar with using some of those classical technical tools. So Alex, let's move on from BLND and let's take a look at the biotech index. XBI is the ETF ticker symbol. We'll look at these in aggregate for a minute. There are many names in the biotech space. Sorry, I keep saying biocap. Hopefully I'm not saying small crap index. We're certainly seeing a lot of opportunities in that smaller cap space. Biotech's occupying a lot of the Russell 2000. So from the biotech ETF, we're seeing a strong go trend. Had a brief dip below the zero line into negative momentum on the GoNoGo oscillator, but now we've got a trend continuation icon back in positive territory. And of course, that lower momentum move was on very light volume, which tells us that there could be a next leg higher here in the biotech space.
Yeah, obviously we're right up against time, but I think this move might give us what we need to challenge these prior highs. And if it makes you feel any better, I'm pretty sure that I did say, the small crap index earlier on in the video. So we'll leave that for viewers to enjoy.
I love it. Thank you, Alex, for your time today. Thank you, viewers, for watching this GoNoGo show. We will be with you every Thursday afternoon at 3:30 Eastern time. Be well, trade up safe. Talk to you soon.